Marico's Q3 FY21 numbers are largely in line set of numbers where revenue and PAT came in line with the 18 hour expectations, while in terms of the margins of the company, they were slightly below our expectations. Now, let's take a quick look at the numbers. How have they come in? So, the revenues continue to see a double-digit growth. It's gone up by 16% and came in at 2,122 crores. While in terms of the profitability of the company, we're seeing a 13% jump in the profits and they've come in at 312 crores. Margins have contracted actually, and we were expecting an expansion, but we're seeing a contraction in the margins this time. And the margins have contracted by 100 basis points on a year-on-year basis. The margins are coming at 19.5% versus 20.5%. This is the operating margin that we're talking about, or EBITDA margins, or you could say. So volume growth, a very good volume growth seen by the company, a 15% growth, and this is a domestic volume growth which we are talking about. So good growth that we're seeing. Now, what is the main commentary that is actually coming in is that rural is continuing to outpace the urban growth. We've seen a strong consecutive quarter in Parachute as well, where the volume growth was 8%. Saffola obviously has continued to do well, Saffola Edible Oil, and we're seeing a 17% volume growth there. The foods portfolio has done exceptionally well, is what the company has highlighted. So surely let's highlight that food portfolio has continued to do well. Now, talking about the premium and personal care portfolio, we're seeing a degrowth this time around, being discretionary in nature. It's a 4% degrowth on a year-on-year basis, but overall we're seeing a sequential recovery if you see look at on a month-on-month basis or quarter-on-quarter basis. VHO has continued to see a strong broad-based recovery. But margins, what is the pressure on the margins is obviously the inflation in the raw material prices has surely impacted the margins. That is both we're seeing a decline in the gross margins as well as the EBITDA margins. And the hygiene segment which the company had recently entered into, now the company is saying that they're not seeing as much as demand that they saw in the hygiene segment previously. That demand has come down. Now that has tapered off. And looking at that, the company has withdrawn the investments it was looking to make from the hygiene segment. So that is what we're seeing over there in the hygiene segment terms. Now talk about the international business. The international business grew by 8% for the company on a year-on-year basis. This is in constant currency terms. Bangladesh has been doing well for the last couple of quarters and has continued and sustained its growth momentum, which we were seeing in the last couple of quarters. So very good sign coming in for Bangladesh. But let's talk about the other international business of the company. That is, if you look at the Southeast Asia business as well as the MENA business, both these businesses have actually seen a degrowth this time. MENA has seen a degrowth of around 1%, while when I look at Southeast Asia business, that has seen a degrowth that's down by around 3% in constant currency terms on a year-on-year basis. So that is some pressure that we're seeing over there, but Bangladesh for the company has surely continued to do well. Now, what is the outlook that the management is actually giving going forward is that they remain quite optimistic with the trends, this trend which we're seeing right now. They see that the trend will continue and sustain even going forward, owing to the obviously rural growth that we're seeing. Strong rural growth that is expected to continue as well. Obviously, in terms of Saffola Edible Oil, they expect the high single-digit volume growth to continue in the medium term. While for premium personal care segment, they're expecting the muted kind of a growth is what they are expecting to see. But all in all, the company does have a very optimistic outlook for the future, and they think that they will manage a good growth in terms of even the Parachute segment, which is an important brand for the company. That will be also expected to sustain this elevated growth in the near term as well, is what the company is saying. So all in all, optimistic outlook, in line set of numbers, good volume growth by the company, just some pressure on the margins. So this is what the key highlights which came in from Marico's earnings.